Good day, fellow investors. Yes, the market should crash 50% if we look at the fundamentals. If I look at the S&P 500 at 4,514 points, closely getting in on those all-time late 2021 highs, it is really crazy that things have changed so much since zero interest rates here and printing money, and the stock market hasn't moved much. The thing is that everyone is projecting interest rates to be much lower over the long term, and that is what stocks are priced off. And yes, if interest rates for the long term stabilize around 2.5%, like it is the projection from the Fed's dot plot, then yes, a P/E ratio now of 24, given earnings are in a recession, is justified. However, if this doesn't happen as planned, and let's say we have more inflation when the Fed starts lowering and rates stabilize at 5%, which would be something normal from a historical perspective, then this P ratio of 25 is extremely high, and something closer to 15 is what would be justifiable from a fundamental perspective. Thus, if we look at earnings, if we multiply these earnings with a P ratio of 15, we are at 2,730 points, which is very, very low. Further, on earnings, this is what I found from our quarterly market overview from July 2022. Look at the earnings projections by analysts for the S&P 500. So that is 2022, the projections were 225, and for 2023 250, and for 2024 275. The reality is not 250, the reality is 180, and perhaps even lower when yearly earnings come in. This is a huge difference, but then I don't get why people always trust the projections. Yes, interest rates will go lower, buy stocks. For me, it's simply insanity and too risky. Further, I can also discuss the dividend yield. The current dividend is 70 points. Historically, it has been around 5%. If we exclude the very low dividend yields from the last 2-3 decades, it's 5%. The S&P 500 would be at 1,400 points if things ever return to historical normality with interest rates and money printing. So that is insane, and therefore I'm just saying that the risk and reward of investing in stocks now at these valuations is crazy, and therefore I'm saying that the market should crash 50% to give a fair valuation to things. I'm not saying it's going to crash, I'm just saying it could crash. And then I'm asking, okay, if it could crash, what's the reward? 1.5% dividend, that's crazy to just hold on because stocks always go up. And now you might say, Sven, but you just said that the S&P 500 could be at 10,000 points, and that's also very possible, but I don't like the risk of hoping for high inflation to money printing, stagflation, and also earnings coming back at some future date with lower rates. And it is possible because the government might sacrifice real returns for fake S&P 500 10,000 points 7 years down the road, which would mean the dollar is worthless. So everything is possible, but I'm just looking at balancing things within what can happen, what is the risk and reward, and I'm telling you the market is extremely risky. What to do? Well, globally we have lower P/E ratios, growth businesses, and you can check my research platform. As I said many times, this is the best time to join it.